if you look at your early stage SMEs, they're first to market with opportunities. So they play a critical role in moving us forward as a country in terms of participating in innovation.
And as new technologies emerge, as they improve, it's actually quite scary. Actually, if you look at what if you look at the things that are possible out there, especially with this whole AI thing now. I mean, you can kind of automate a lot of processes,
especially problems that can actually generate revenue. Like people are willing to pay for that.
Yeah.
That is something that, especially in terms of what you're mentioning, Malu, which our entrepreneurs are very good at. We are very good as Africans generally at solving our own problems, and that's where a lot of the entrepreneurial spirit comes from.
But there's something that is blocking a lot of businesses from actually scaling and growing as we should. It is really good to be here, and thank you to our hosts, 100 Women in Finance and Edge Growth. This panel discussion would not be possible without you. Of course, I've had a number of conversations on SMEs in my career spanning 6 years as a broadcaster and financial journalist. And really what is clear to me is that we have a lot of guts in South Africa to start our own businesses, and we really have no shortage of brains and ideas. But there's something that is blocking a lot of businesses from actually scaling and growing as we should. So today we will be unpacking I thought that the title would be there. Hey, it's still me. We won't be unpacking me. There it is. The critical role of SME innovation in South Africa's economic future. Of course, as we're talking about these blockages, we really need to, I guess, not ask too many whys. I think we know the whys, but really ask the hows so that they can be actionable solutions that actually boost the SME sector significantly, to chart a path forward and also to really create fertile ground for innovation within the SME sector. We have heard a lot about how this is the backbone of the South African economy, but really now we need to make it count so that we can actually grow this pie, this very, very little pie. Subdued economic growth of 0.6% is not going to cut it. So we need to see how we are going to use the SME sector to actually propel our economy here in South Africa. Thank you to my wonderful panelists that will give us their expertise and insights into how we chart this path forward for significant growth in the SME sector. And really, before we get to the meat and potatoes of the conversation, I'd like you to introduce yourselves and really just give us context into your role in the SME ecosystem. And I want to start off with you, Sizwe.
Thank you. Hi, everyone. So my name is Sizwe Ndlovu. I am a co-founder and the CTO at Pineapple. We are an insurance provider here based in Johannesburg, and we're an SME as well. Thank you to Edge Growth and the 100 Women in Finance organizations for hosting us. So yeah, that's a little bit about me.
We know you from your ads.
Yes. I wish I could take the credit there, but that's more on the marketing side. So yeah, love to be here and looking forward to the discussion.
Lovely.
Hi everyone, I'm Nolu Vonela. I'm a fund head looking after one of the funds within Edge Growth Ventures. Just to give an idea of what we do at Edge Growth, we basically create access to markets and access to finance for SMEs and support business development for SMEs through both programs that we run through one of our business units and funds that we manage on behalf of corporates and mining houses, often in the ESD space, so enterprise and supply development space with the BEE spend, but also outside of that, beyond SME, beyond BEE, but focusing on impact investing. So I look after one of the funds in that space.
Good evening, ladies. I am Cleola Kunene. And I'm here on behalf of the JC. I'm at the JC. I've been there for a very long time. I can certainly tell you when I started, the room didn't look like this. It was very, very male. And so this is absolutely beautiful. I work with SMEs in the SME space and not in the ESD context, but really around the context of how do we scale the next generation of large enterprises and facilitating specifically, the economic triggers such as funding, facilitating more funding into the country, funding to our SMEs, and also looking at the pathway to making exits and things like that easier. But more than that, it's also about market access and a few other things that I do, which I won't mention today. But yeah, that's it in a nutshell.
Right. Thank you so much for that. So, we talk about, the SME sector being the cornerstone, the backbone of the South African economy. Noluva, I want to start off with you. What does that actually mean, and what do we use to measure that value?
So we know that SMEs create jobs. They're actually the primary job creation sector out of all the different sized industries within our country, which you wouldn't think when you see the level of support SMEs have versus larger industries and corporates.
Yeah.
But yes, job creation is a big part of what the SMEs do in terms of the ecosystem of the country, as well as contributing to the GDP. In terms of our conversation today, SMEs probably lead innovation a lot more than the larger corporates as well, because they have the agility and flexibility. And they normally, if you look at your early stage SMEs, they're first to market with opportunities. So they play a critical role in moving us forward as a country in terms of participating in innovation and growing our industry, broadening our industries. So when we look at measuring the impact of SMEs, we would look at the growth, how fast growing SMEs are, the revenue growth, are they moving through different stages in terms of business sizes? Because ideally you want to see small businesses grow into medium and eventually become the corporates of the future.
Yeah.
And there you see a country's development to measuring the job creation element and other impact measures according to the industry which they're in, and the industry penetration, because they struggle with a lot of barriers to entry. Is that changing over time? Are there more participants? Is there more diversity in the participation? Those are some of the key things we definitely look at supporting and look at measuring when we talk about the impact of SMEs and what support they need.
We will drill into some of those as we move on in the conversation. I want to come to you, Cleola, because I don't know, the word innovation just sounds so intimidating. What do we mean here by innovation? Are we reinventing the wheel? Is it doing things differently, looking at them from a different approach? What do we actually mean by innovation in this space?
So let's break it down a little bit in terms of what we have in our minds versus the reality. Usually when we have in our minds is we're thinking technology, AI, those types of things. But innovation is a few fundamental things. One is problem solving. Do we have the capability to solve problems in unique ways, especially problems that can actually generate revenue, like people are willing to pay for that?
Yeah.
That is something that, especially in terms of what you're mentioning, which our entrepreneurs are very good at. We are very good at Africans generally at solving our own problems, and that's where a lot of the entrepreneurial spirit comes from. Secondly, you're looking at innovation, and we have a lot of innovation, especially in relation to either new solutions, products, but also intermediary services, you see, such as fintech, etc. And that's where what we generally understand in terms of, tech innovation, high growth innovation, etc. But the innovation actually that sustainably makes a country the most money over a longer period is IP. Right? And if you have original IP, that's where you make the most money, and that's true innovation. Now, if you look at South Africa, and I'll give an example that makes me truly sad, is that the lithium battery, the IP for the lithium battery was created here at CSIR in Pretoria. We innovated it, we researched it for years, and then we didn't commercialize it. But South Korea did. And so still today, they make money from that IP, right? And there's many IPs I can mention, cloud services, etc., like, that come from here. But because we never invested in the innovation and we never commercialized it, so we invest in the research. Even, for instance, the cheapest HIV testing kit is from here. That's innovation, but we don't commercialize it and we don't manufacture it. So we lose the benefit of the innovation. So true innovation, not that other things are not innovation, but true innovation is something that sustainably can make you money over a longer period, even decades, years, right? And that's the fundamental part of when we talk innovation. Yeah.
Well, also when I think of innovation, I think disruption, and Pineapple, definitely a big disruptor in that insurance space, a highly competitive landscape. And I'm wondering what made the Pineapple co-founders decide that this is what needs disruption and that we are going to do something different here, Sizwe.
Okay, cool. So just to give a brief, story about the formation of Pineapple, it really, there were the three guys, Matthew, Monas, and Da, who came together through an innovation competition. And the task there was to kind of solve issues pertaining more to reinsurance, which is basically insurance for insurance companies. But through that process, they followed a whole process called design thinking. And that is where they and through a lot of research, they identified a lot of like the gaps within the insurance market, people's perceptions of it, the fact that it's seen as a garage purchase. You don't want to keep paying insurance. It already has a bad reputation. It's like, why pay? And, come claim stage, you're not going to pay my claim. So a lot of these things were then identified, and, that's where we felt that it needs to change. We need to change from a garage purchase to a love purchase. It needs to be, insurance at its fundamental is supposed to be that one thing that helps you in your time of need.
Yeah.
And that is what we pursued on, just from even the littlest things, just your experience with engaging with the product, your experience with getting cover, your experience with having claims. Those little things can really just change everything, and we just kind of went in and innovated in all of those spaces, really just kind of focused on the customer, the pain points of the whole, process. And we decided, like, let's just make it better. Let's just make it a much nicer experience, and, it's exciting to see, because obviously it's not just us who've kind of come in the market. There's many others, but it's really exciting. You can see now the innovation that's really kind of coming to the market, and with more competition, it's better for you as a consumer. So we're very excited, to kind of go down that road, but it also speaks to kind of the innovation coming out of South Africa. And I'll even say Africa as a whole. I think for these past couple of years, there's just been a lot of companies kind of coming in and innovating traditional industries and just reimagining how, we do it, Yeah.
Very, very interesting and quite a story there. And as I mentioned, particularly with all these big players in the insurance industries. And also what really sticks out for me is that innovation doesn't have to be something big. It can be doing something small differently in an easier way, a way that makes it easy for the customer to interact with your product. Noluva, I mentioned the subdued economic growth environment that we are in. And really at this point, it's all a market share game between all these companies, big companies and small companies. Does then, especially for small businesses, does innovation need to be at the heart of their operations? Does it need to be a strategic pillar that they focus on?
100%. Because if you think about it, the larger corporations have the advantage of numbers in terms of headcount and people and supporting the cost structure. But with innovation and using tech tools that are available to them, especially now with AI and all the developments around there, that's an opportunity for the smaller businesses to operate at the same scale, but needing less headcount. So businesses need to start thinking outside of the box and always focus on scalability of their concepts and their business as a whole. That's an opportunity. Also, being more customer responsive is an opportunity for SMEs. Sometimes in the bigger corporate chain, there's more clogs and there are more bottlenecks to be able to be responsive to your customers, and that's what often creates industry opportunities for SMEs to pop up. Usually they are able to attract some dissatisfied customers within an existing industry, and that's another opportunity that innovation then allows you to think beyond how large corporates are currently operating, and see opportunities that would satisfy and result in repeat business with customers. And even if you focus on a small base initially, the reputation of your business will allow you then to scale from there. So definitely needs to be a focus area. That's how they can break into industries that are currently a barrier. That's how they can grow their market share. They need to differentiate themselves. And right now, innovation is the biggest opportunity for differentiation.
Cleola, you mentioned this earlier, is that when we think about innovation, we think about technology. Do a company's innovation efforts need to be married to technological advancements?
Yes and no. I mean, it depends on the company, but I see technology very, very different because it's fast, right? You can have technology innovation in making a sauce. Not necessarily just in this different technology that people use, even in how they make steel. So technology is about how it optimizes your business and helps you to be agile and more competitive. Because the ideal is obviously more cheaper, better, faster, and you're able to compete. And we see technology playing a role across the board in industries. We see companies, for instance, in the mineral space using technology to, for instance, secure their minerals better, right? So they use drone technology. We see technology not just in terms of software development, etc., but we see technology even in terms of, and I use the example specifically because I was working with a company that were making sauces, and they completely revolutionized how they make their sauces, cheaper, better, faster. And we're able to secure better contracts because of technology. So technology definitely plays a role, but it's also dependent on your industry and what's relevant to you. Not everything is relevant to everyone. And it's important for the business to understand also what, they're going to leverage to give themselves a competitive advantage.
I want to stick with you because, as we talk about technology, there's still a very big digital divide in South Africa. Do you think that a lack of technological capability could also be hindering innovation in the SME space?
Absolutely. It's actually one of the biggest challenges that we're facing in terms of the divide, because when you engage, and I've engaged with companies across the country, and I have to use practical examples. I went to the Eastern Cape and met with youth entrepreneurs. Amazing ideas, right? Amazing ideas. Shared computer, right? In a lab. But the ideas are there. The work is there. The ethic is there. The businesses could be amazing. But there has to be fundamental investments in an access, because access plays a role in giving us the edge. Without it, we're always left behind. So yes, you can have the best ideas in the world, but unless you have that, kind of a non-starter.
Sizwe, as a disruptor in that insurance space, has the evolution of technology worked in your favor?
Is that even a question? No, by far, I think it's definitely benefited us. Yeah. I think Cleola mentioned some very good points. The technology can actually be applied in different contexts to do different things. Yeah. But specifically, obviously, from the Pineapple context, we've made technology like our core product. And Nolu's also mentioned, with the advancements of AI, et cetera, it allows us to, apply certain or different ways of focus around the customer experience, So, and as new technologies emerge, as they improve, it's actually quite scary, actually, if you look at if you look at the things that are possible out there, especially with this whole AI thing now. You can kind of automate a lot of processes, for example, I thoroughly believe one day, we'll be able to pay out your claim, within 15 minutes just by getting to a decision, by sending all of the stuff to an AI and to, just analyze everything and just say, pay her out, and then just kind of pay it out or not. But that is the power of technology. And I think most people don't really realize how powerful it is. It is even somewhat scary. I even think like it really could get to a point where it replaces human beings. Like there are certain jobs which are definitely at risk. And I don't know, I think about what that means for the South African, or when you say the African economy as a whole, and even the skills that we need around there, because actual practical skills may be replaced in that context, but then maybe the training should be on how to use the technology as opposed to trying to do the job that the technology can do. And I think over there we can have massive benefits, massive benefits in innovation.
I want to talk about money. And Cleola, you mentioned that we innovate a lot. A lot of things are done here. A lot of ideas are here, but we don't commercialize them. Why is that?
I think it's maturity of money. If you look at South Africa, I mean, in comparison, and maybe the US is a big comparison to us, but it might be a nice comparison because we always like to look at the US and what's happening there. But look at, for instance, our VC space, our private equity space, it's still quite young, right, in comparison to other countries, especially our VC space, which invests in innovation or even IP commercialization, is quite young. And it's a function of maturity of alternative funding solutions. If you think back, I mean, where did we go for funding? We used to go to a bank. That's all we knew. Like, go ask for a loan, sit with the bank manager. If he doesn't like you, maybe, you don't get anything, right? But we've matured in a sense that we now have so many new funding solutions. I mean, even if you look at like the work that Edge does, it's so important, right? Because it brings new, fresh capital for solutions, right? Whereas traditional capital invests in certain things. And also, it's important to understand that economically, we also come from an economy that was rooted in commodities. So fundamentally, our financial structures were geared towards funding commodities, right? And then secondary funding, the structures that back commodities, financial institutions, etc., etc. Now, when you come with, I've got a great tech company, who are you speaking to, right? So that has evolved over time, and we're still relatively, I think, and correct me if I'm wrong, but I think one of the oldest VC companies in South Africa is just like 10 years old, maybe a little bit older. So we're still young in that aspect. So it means that the capital that supports innovation is still evolving, but it's there. It's still young, and means also there's not a lot of it yet. We're still trying to pull a lot of that capital, and that's why facilitation of international capital for innovation. The more innovation we have, the new kids on the block, the more companies that we have that are demonstrating unique solutions, the more capital we're able to attract.
It's quite interesting because I think you mentioned it, Nolu, earlier that SMEs are very important for the economy, but at the same time, you would think that all the resources would be dedicated to supporting the industry, but that's not the case. The scales aren't balancing. And I was going to ask if funding follows innovation. I don't know what's your reading of that, of the scales not balancing?
The funding space, as Cleola's touched on, has, I want to say, traditionally been very traditional, because literally that's what it is, as strange as that sounds. It has a traditional background. So innovation in the funding space alone, before we even go to the beneficiaries and the investees, the businesses that are funded by funders, innovation in that space alone is still at an early stage. That's why you find that our VC industry is still so young. And one of the disadvantages of that is that there are very few exits at this stage. And the funding industry is very reliant on test cases and success cases, the more that success is seen in terms of new instruments that we use to fund, the more funders you'll see in that space, the more institutional investors will make funds available to fund managers in that space, and the more risk you'll see taken. So we're still finding ourselves at an early stage of innovating as funders, and then we have these SMEs that have a need where they are looking to innovate in their industries, and they need agile funders who can understand that, and they find themselves that stopped at the door because of a traditional lens of, well, what security do you have? What financial history do you have? What experience do you have in this industry or in the specific solution, which may be a very new solution, and it's a viable concept. It hasn't been tested, and you're a sort of an early adopter, and you can't prove that yet. But so it requires a different way of thinking. It needs funders to think outside of the box. Okay, how can we test that the concept can potentially be viable? Are there ways that we can stage the funding for this business? Can we rely a bit more on the team behind it and the entrepreneur behind it, and understand that they have the right personality to see it through, because early stage businesses do have a high rate of failure. So that is a risk that has to be considered by funders. But how can we look at that with a different lens? How can we look at the risk? Because let's be honest and let's be fair to funders, the funds are sourced from somewhere. Whether you are looking at development finance institutions, they have state funding that needs to be repaid. Whether you're looking at our space in enterprise and supply development, we have corporate funds that need to be repaid. Banks have funds that need to come back into the ecosystem and support more applicants. So then there needs to be risk management and understanding that the funds will return so that more SMEs can be assisted. But how can we look at that with a more innovative lens so that we support more businesses without necessarily doing it from risking the return on capital either? It's still an early process for both funders and SMEs. We're on this journey together.
And I actually want to ask, because I mean, you've worked across the board in terms of the institutions that fund SMEs. Has that been a deliberate move going from traditional funding, banking to venture capital?
If I may be honest, my CV profile shows how passionate I am about entrepreneurs and SMEs, because what you referred to, Zinathi, is that I started out in banking and looked after an entrepreneurial portfolio and talked a lot about the people behind the business when we needed to consider the financial risk purely and the ratios, and make a decision from that perspective, and moved into a risk financing space where we could actually focus more on the viability of the business case.
And now innovation is at the heart of that instead of the other things.
But now, yes, now the focus is on the impact as well that the businesses are trying to make in their industry. And because we're driven by supporting that impact, then we understand now we've designed investment criteria and investment assessment processes that then understand what they're trying to do. So we support more early stage businesses at Edge. We have a VC lens, and we support innovative tech-enabled businesses. But as Cleola mentioned earlier, innovation does not necessarily mean that your business must be in the tech space.
Yes.
It must look at opportunities of getting ahead of the market and using tools available to improve. So we look to understand those type of businesses where we call them the missing middle, where the traditional finance system doesn't understand them, but they have a viable case, a strong team, and an opportunity to scale. And they need that support and understanding. But then when we do support them, that's why we also understand it's beyond financial support. It needs to come with business development support, needs to come with opportunities for access to markets where those can be enabled, so that the businesses can then achieve the scalability that we project when we look at the funding.
And we will drill into that shortly. But Susan, I want to come to you on Pineapple's journey in terms of accessing funding. In this case, did the funding follow the innovation? Because also, I mean, Nolu talks about the missing middle. It's quite a diverse space. And the way you look at it, it feels like startups, and particularly tech startups, are the ones that absorb most of the capital inflows.
Yeah, definitely. The last part you said, I think that's clearly evident if you look at your markets like your US, and I guess just on a global, if you see the impact of technology as a whole. Yeah, the the funding it is a very tricky dance, as kind of explained to us by Nolu. Yeah, look, from the Pineapple perspective, I think we're very fortunate. I mean, definitely, technology and the innovation of using it was quite attractive to a lot of investors as well, also in terms of what we're trying to achieve. But also, just speaking to what Nolu was saying, where funders typically want to look at how the business is operating, where are they saving on certain things, etc., etc. And I think we were really able to do that quite well using technology, which, I would think made us, look a little bit more attractive to investors. Um, yeah, a lot of those optimizations, et cetera, which I guess, thinking from a business point of view, thinking just from a bottom line point of view, ensuring that, you try to reach profitability as soon as you can. So you need to kind of squeeze in, like in all the parts where you can save, you do save operational efficiency, et cetera. All those things kind of help when it comes to the funding case. Then on top of that, then there's also, bottom line things like, are you profitable, et cetera. But, yeah, I think from a point of view, I think we're quite fortunate. I understand, especially in markets like South Africa, how it's not as easy to get that kind of funding. And I think there are a lot of criteria that funders do look at when they're dealing with SMEs. They also look at the founders themselves, how much experience do they have? It's kind of like that running joke on LinkedIn. It's like, you start in your first job and then they want like 5 years experience, a very similar dance over there. So I think, I think we're just very fortunate from the Pineapple perspective, that we're able to kind of do what we do. And, as Nori mentioned, I think it'll take time, until the market kind of matures and you've got a lot more money to kind of spend. But this is me personally speaking, I think we just need that unicorn, like that Facebook or whatever, that just brings in a whole lot of money internationally into South Africa, so that this money can just kind of spread across funders, etc., and give me a lot more to throw around. That's just my personal opinion.
All right. Well, I want to get into partnerships and this non-financial support. Cleo, you look at the ecosystem. Talk to me about the players within that innovation ecosystem, and who SMEs really need to look out for in terms of also partnering and collaborating with them.
So I think South Africa has quite a lot of players. I mean, starting with government. If you look at Department of Small Business Development and then DTIC, are funded significantly to roll out SME development and initiatives. But then also we have a lot of DFIs providing funding, right? But I think the challenge that we have, and I have to be honest, is that we have a lot of players. I mean, even from a development support, like organizations like Age provide a lot of amazing development support, but we are very fragmented. So if you're the average SME looking for solutions or trying to go through an ecosystem to support, you can get incubated 10 times without actually growing.
Yeah.
Right. And so, yes, we have a lot of support. There's the government, which is, front and center from development, funding, etc. Then we have development ecosystem players, as I said, like Edge, and a lot of corporates that provide ESD funding and support. But generally, there's hubs everywhere. There's actually a lot of support in South Africa, a lot of support. So then the question is, despite all the support, why are we still struggling? All right. So we're struggling because, one, we're fragmented. Even between Department of Small Business Development, DTIC, it's fragmented. In fact, one of the things that just frustrates me is that there's I think an amount of up to like 30 billion that's sitting there between the two of them. It hasn't shifted because they can't get to an agreement of how it'll be optimized for SMEs, right? So we're quite fragmented, but what I'd rather look at is maybe what are the kind of models that we can look at and emulate to help us. And I think it's important for us in this room, because of the industry and the spaces that we're in, to start thinking in that way in terms of creating cohesive value chains for development, because it benefits everybody. Now, if you look at countries such as India is one of my favorite examples, but now I'm really focused on Hong Kong. But India is one of my favorite examples because India started, I think, in the 90s, and they started with Think India, Think Digital, right? And when they said that, obviously at that time it's still early days, but what they did is they looked at to get to digital, what are the skills you need, right? And they supported the skills development ecosystem, saying, what are all the layers of skills? And I mean, there's a pyramid of skills in digital that you need, right? Who's going to do the development? One. Then, who is then going to do, once these people have been skilled, who's going to do the nursery? Like, who's going to train them in the workplace? Because you can go into a workplace as a graduate, be there for 2 years and walk out knowing very little. So it has to be intentional. And I love that, like the intentionality about building out an ecosystem that works. And then they had the business creation out of that, or job creation out of that, and placement. And then on the tail end, the market, right? Who's going to go out and find the market, etc. But essentially, the entire ecosystem benefits. And underneath that, underpinned under that, is funding. Every aspect of funding, right? Now, why did this work for India? It's because they understood, for them to actually be a leader in digital. And I mean, even just call center alone, do you know that India provides 7 million people in technical call center to the US? Just that. 7 million people. Do you know what a difference that would make to us? We have an 800,000 skills gap in digital, 60 billion rand that's currently being outsourced to other countries because we're not fulfilling that skills gap. So the ecosystem, in terms of how we work together, in terms of SME, if we want to change it fundamentally, it's there, it's prevalent, there's a lot of it. We all know this. It's not unique, but it's not necessarily having the impact because we're not cohesive.
Okay. And that's very, very important for everybody to know what they are doing and what the impact should be holistically. Nolu, I know that Edge Growth also really values partnerships. So when you are looking for partners in this impact effort in that ecosystem, what exactly do you look out for? And just what are the experiences that you've had within this ecosystem?
We have the opportunity to marry institutions, corporates, and SMEs. So we always look, when we're looking at our investor partners and program partners, which are then typically the corporates and the larger institutions, we look for the same level of investment on SMEs and driving impact within SMEs. I mean, there is an advantage for them in building the value chain that's available to their business, the supply chain, where they are advancing SMEs or growing SMEs within the supply chain means that they are able to get better service, more prompt service, have more options locally from SMEs, have more transformed options available to them that can service them at the level that they require. So there is an incentive for them to support SMEs accordingly. So we look to see that we are on the same page in terms of wanting to assist SMEs in growing, assist sectors in transforming, and drive job creation, drive scalability, and see that it benefits all of us across the ecosystem. And then the opportunity for the SMEs is working with the institutions or the corporates, they because they are understood better, it creates better access to markets for them, and increased access to opportunities where maybe it is already a customer of theirs. However, now the customer actually understands their operations and their limitations a bit better, and the support that they're getting, and they're able to take more of a risk or allow more opportunities for them. And we've actually seen a lot of businesses grow in the logistics space. We've seen businesses start off transporting with one truck and grow to have much larger fleets, because of the supportive relationship they then have with the corporate that was initially an investor relationship and just a singular client of theirs, but then opportunities grew over time, and they also had the support to scale the business. And we've seen it across a number of industries that we have the privilege of supporting through our different funds. So it's a very important consideration for us. That's how we create true impact, where the two start working together.
Sizwe, no business is an island. Talk to me about the kind of partnerships that Pineapple has actually engaged in. And really just your role in that ecosystem and the support that has come through for Pineapple.
So I would like to, speak, more like from the partnerships, that we've had along, like more investor lines, and also in terms of strategic initiatives also that we've done, with the help of Edge Growth. So what it's been quite, I think that's where a lot of investors can also, you kind of get more value than just the funding, where, you get access, as Nono was mentioning, access to opportunity. You get to, we've had a couple of instances, kind of where we've been actually, put introduced to other portfolio companies, etc., to kind of see where we can get synergies in terms of, kind of further growing the organization. Obviously, it's part of the support that we get as well. Obviously, being an insurance provider, us as Pineapple, we do have our underwriters as well, who have really, kind of helped us, like set up business and, actually sell. And that's where we foster a lot of collaboration as well with in terms of our partnerships. There's been a couple of them, and we're very grateful for them, by and large. I think they really do help, SMEs, and actually speaking from their point of view, just really kind of get that lift off the ground, and kind of get a fair shot to kind of go into the market and kind of sell your product and try and, prove the value, behind what you have. Yeah. So, yeah.
All right. I think maybe just two more questions for each of you before we go to the Q&A session. They actually said in the briefing that it's an open mic session, and I thought that someone was going to be rapping, but so I don't know, but it's a Q&A session. No one will be rapping today. Cleola, I want to come to you in terms of non-financial support. How much of a priority is it in that ecosystem to give non-financial support? And actually, when should it come in? Should it even come in before the funding, or?
Yeah, it should come in at school. Non-financial support is critical. I mean, obviously there's a lot of development support, and I think that's quite key. But I think Sizwe mentioned market access, and Nolo also mentioned market access. Now, even in terms of the work we do, we play a very convening role, which means bringing the ecosystem together, right? And this plays two roles. One is for the various players to, benefit in their own right in terms of being part of the ecosystem, but also for the SMEs to benefit. And this is important in a few ways. If you look at large enterprises, how do large enterprises identify new companies, right? And we can play that convening role. usually there's a lot of gaps. And we would think, because a lot of companies go to the large enterprises and say, you know, I've got these services, but a lot of it doesn't really filter through to the decision makers, right? So how do you bring those people into the room? Similarly, we play a convening role with government, etc. So I think in terms of the non-funding support, it's both development, but also being able to just speak to the right person.
Yes.
Somebody can actually just buy your products. It comes down to that, right? And somebody helping you create credibility for your business, because up until that point, you're just an email, right? So it is very, very critical. And we've seen that it does gain results, you know, not always, but when it does happen, I mean, there's a company that I won't mention the company that we worked with, and I introduced them to a company in Atlanta in the US. They, through that one contract, and then immediately after that, another contract in the US, South African business, they grew by 1,008% in a year. Now you can imagine what a difference that made to them. But that was just a connection, right? That they wouldn't otherwise. Before that, it was just, hi, we have this, you know, please buy our product. So it is critical. It is very, very critical.
What's your experience of that been throughout your career, Nulu? Non-financial support.
We found that it's critical. So especially with my exposure being in the funding space, you see a lot more success in businesses where they have both financial and non-financial support. And more often than not, you actually find that the need primarily is non-financial before they reach a stage for the financial support. A lot of the conversations we find ourselves having with entrepreneurs is actually understanding what they're trying to achieve with the funding that they are seeking. And when we unpack that fully, we realize that there's a bit of a journey that they need to take first so that the business is ready for that growth and to set them up effectively. And that's where the non-financial support plays a role. Sometimes you have to understand that entrepreneurs also are focused on the operations of their business. They are technical experts in what they do. But there are other aspects they might have a blind spot to, like the governance structures of their businesses, risk areas within their businesses that they're not mitigating, opportunities that they're not accessing because they're sticking to the traditional route of operations that has been working. It's been their tried and tested model, and they haven't thought about diversifying beyond one specific client or a limited number of clients, or diversifying beyond industries, like for example, just only being exposed to the public sector and not creating a balance when there's an opportunity in your industry to have both private sector and public sector clients. Looking at the payment rates of your clients, and also diversifying that, taking opportunities to have customers that pay you cash on delivery, shorter 7-day terms, and then still have your big clients that will pay you on a 3 to 4 month rotation. So a lot of those things don't actually require funding for you to start making those changes and seeking those opportunities, but they will definitely unlock funding for you. Because when you now have to go back and have a conversation about your growth business case, it's a lot more tangible, viable. There's actually offers from prospective additional clients that you're looking at that can support the funding that you need. And it's not going to debilitate your business, because the other communication breakdown sometimes between funders and the entrepreneurs is why declines occur. The important thing that funders have to consider is that the funding is not going to cause your business to regress or even shut down, that it's actually going to help your business grow. And funding at the wrong stage, and funding when it's not the right tool to get you to what you're actually trying to achieve, can actually have the opposite effect of what you're trying to do in your business. So there's that responsibility for us to also communicate that and assist the entrepreneurs in having the right tools. So non-financial support is critical for growth.
And as we're talking about that, Caesar, for a fairly young company, is mentorship something that is imperative?
It definitely helps. I'll definitely say there. I think especially if for our context, this is like the first kind of business that we're doing at this kind of scale. So there's no experience we had prior to running businesses, etc. We just, I guess, it looked like, I guess we showed some level of acumen, in terms of, like a belief in terms of doing it, but we did not have the experience. It would be quite often I'd be sitting in a room with people they were like 10, 20 years experience, but they're my counterparts now because now, I'm a CTO, they're also CTO at whatever. But I mean, the experience gap is so much different, but that is the value where I think, your funders can kind of come in and bring the non-financial support. Those kind of things, they are so critical in terms of, assisting you as an entrepreneur in your journey. Like the value is really insurmountable. And I think even like that, just being introduced by someone who is seasoned within the the industry brings a great sense of credibility and I guess faith in terms of you as an entrepreneur and the value that you can potentially bring. So there, 100%. I mean, it's not enough to just give money. As Nolu said, like you could in fact create the opposite effect, and you actually just like not manage it well, and then just kind of burn things down. Not to be negative, but yeah.
All right. Just as we close this discussion before the Q&A session, what then, Cleola, do businesses need to assess to kind of, or to look at and dissect in order to assess their readiness for their readiness to go looking for funding, their readiness, to ensure that their innovative profile does align with the kind of investment that they're looking for?
Firstly, do they need the money? Often they think money is going to solve the challenges in their business, but it's in fact the strategy, the this, the that. So money is not the first trying to, because it's someone else's money. Right. I always say to the SMEs, especially when I'm helping them with funding readiness, I'm like, everybody loves the wedding day. Nobody wants to do the work in the marriage. This is not your money. So it means ultimately you're now taking on a responsibility, whether it's equity or debt, which means it brings additional accountability into your business, and now you're accountable to someone else. So unless you're ready for that accountability, you're not ready for the money. And then I think in terms of obviously the basics is around their financials, etc. You'd be surprised how many companies don't know what's required. And they become very surprised, like, oh, this and this and that. And we try and make it easy and explain as much as possible, obviously, but there's still a huge gap. There's a huge gap in South Africa in terms of financial literacy and financial literacy in terms of their businesses, right? And then a key aspect for me is legal. One that a lot of companies miss. Again, the marriage analogy, nobody wants the divorce, and divorce gets very messy if you don't have your legals in place. And legals across the board. I mean, there are companies out there that are delivering services with no supplier contracts in place. There are a lot of things I actually dealt with a company that I had to help who had revenue of 300 million, and their employment contracts were from the internet. Right? That's a huge risk, significant risk. So risk management, governance, putting real things in place to really make sure that you're ready for the money that you're bringing on board. Because again, it's not your money. And that money, more than anything, has to go to work. So what are you going to do with it? The moment you get it, the moment it hits your bank account, then what? Every single cent has to be accounted for in terms of what you're going to do with it. And that is the critical part for any company that wants funding.
Nolu, as we're talking about this ecosystem, there are a lot of players in there.
I think definitely across the ecosystem, we all work with SMEs, or they're part of our offering is towards SMEs, but we have opportunities that we need to take advantage more of in terms of collaboration, and we also need people within our teams who actually seek to understand SMEs. So their focus area is around this profile because it's a very different profile to corporates. So you need to understand what challenges they face, what other ecosystem support they need, and be able to also then engage with other ecosystem players to be able to integrate the full support system that they would need to succeed. Maybe to make it just a bit more practical, it is to the advantage of a customer to an SME if they have opportunities that they can open up for that entrepreneur to have access in improving their systems, innovating their systems, digitizing the invoicing system, for example, which might then result in a much faster payment cycle for them within that corporate that's assisting. And if they've got access within the ecosystem to other players that can support them in that, either through accessing it through a business development support program or direct suppliers that are focused on SMEs. So they're not going to come in pricing them like a corporate to then assist them in digitizing the system. So there's always opportunities that can be missed that we need to have more people in our different teams focus on that can allow the SMEs to develop better if we are able to connect them with the right other players in the ecosystem. I hope that that is what you are.
Thank you. Yes. Thank you so much for that. Sizwe, just lastly on your side, what are the key lessons that you've learned in your innovation journey?
The innovation as a whole, I guess, like not okay. I guess yeah, there's quite a bit to say. I think some of the probably one of the most important, I guess, is like really just to kind of focus on the problem and not the solution. It's essentially with your product, you're trying to solve a certain problem that's out there, and a lot of people kind of tend to get focused on the solution that they've created, but might find out that no one needs it, and yeah, these are kind of one of the many things you kind of learn along the journey, and I think if you're an entrepreneur starting out, this is where the value of like mentorship, etc., comes in, and it's very important to accept, understand, and welcome that into the journey as an entrepreneur. And that collaborative energy, with potential funders or mentors, etc., it is extremely valuable. I even think that that's how you can potentially unlock some funding as well. Just to kind of always keep an open mind and know that there's always something out there to learn. There's always something that you can always pick up and learn from the people around you, the people that you work with. Accept the fact that you're not as experienced and accomplished as some of the other people around the room, but just learn from them as opposed to, trying to feel intimidated or anything along those lines. I think that's definitely added a lot of value to us. Yeah.
Lovely. Well, the Q&A session is open. I don't know if there is a roving mic around the room. There it is. So you can just put your hand up. Please be concise in your question, and then you can just say who you are directing your question to.
My name is Rufaro. I work for Jersey Finance. Jersey is a small island outside France where people set up structures to raise capital, especially in the private equity space. I think the one thing that I always find when I attend a lot of these events, capital is an issue. And I think one thing that has been said is around value creation. But what we know very well when it comes to the private equity space, it tends to talk about exits in 5 years. How can we change that language, the narrative, so that there is more talk around value creation less in 10 years? Because then we can then focus on patient capital. So is there a way to change those conversations? Because some of the innovations are not necessarily going to create value within 5 years. So how do we change that narrative from exit in 5 years. But there's so much pressure. I tend to find that a lot of private equity funds, they tend to focus on, I need to have exits. So there's focus on exits, but then what about the value creation? Aren't we missing out on something there?
That's a great one.
Question.
I'll tackle that one from maybe explaining the challenge that the fund managers, the face of the funding, the PE firm that you're dealing with has, and that's the availability of capital in the market, capital to funds. You'll find usually that capital cycle is a 10-year cycle that requires at least sort of 2 rounds of funding. So if you imagine you're speaking about one specific SME beneficiary, to have an opportunity to fund them twice in the cycle of that availability of the funding, and then the capital may need to return back to the investor. So it speaks to what we mentioned earlier around the maturity of our venture capital and our private equity space, the number of exits that we have to show as business cases so that we can be more trusted fund managers to the institutional capital, the international capital that where we fundraise and attract investment from, so that they're willing to look at that more patient, longer term approach. And there are certain sectors that for the business to actually succeed, you do require a patient capital approach. I mean, definitely in the ICT sector, you'll find that there's a longer lead time to because there's constant innovation taking place. And so the growth plan is sort of multifaceted. It's got stages, and you've got to be able to be with them for the long run to see the true growth. And the returns are actually higher, but we need the trust then from the investors to the fund managers. And that's what we're building. And unfortunately, the traditional way to build that trust is to have more successful exits, and then we'll be able to advance that. But it's a challenge that we experience also, especially as funders, because we deal directly with the businesses, and so we understand what the challenge is and we understand what the need is, and we're also constantly trying to attract capital that can have that same understanding.
I'll add to what Nolo was saying. This is actually in my wheelhouse as well, because so the challenge around exits does play a role, right? We are looking at, and one of the things that I'm actually working on is how do we improve the journey to exits, right? And improve exit solutions, because that reduces the risk, right, of the capital and improves the appetite of investors to bring more capital into the country. So it's number one, it's the solution around exits, whether it's listing or private, right, and developing a more ecosystem, a mature ecosystem around exits, and making sure that there's more clarity on then what's next, right? If I want my money, what's next? Then the other part is also there's a lot of institutional capital, and very little of that goes towards private funding. And that's the other part that we need to unlock and that we're working towards. So without those two, and then of course the liquidity aspect, without those two, it's very difficult. It still makes it difficult to attract capital, even though we can say, okay, is our governance improving? Is the economy, which also plays a role, by the way, is the economy improving? Exchange control. So there's a few elements that we can look at, but I think 100% agree. You attract more capital by having a better guaranteed outcome, and then on the other side, just unlocking more pools of capital is important.
All right. I think there was another question there.
I'm Nabila. I look after new business development at Edge. I think my question is for Sizwe, but before I go, Rufaro, that was a great question. I think the other element, Cleola, is partnership. What we've seen in the industries that we work in the sectors that we work in, if there's better collaboration amongst the sectors, you decrease the time required for exit, because now you have access to multiple supply chains for the same SME providing that same service. But because of the lack of collaboration across the sectors, it takes that SME longer to actually grow. Number one. Number two, it creates high levels of dependence on one supply chain. Now you pull contracts and you devastate a business. Instead of we can collaborate. Take the Platinum Belt, for example. There's many mining companies there that can collaborate across their supply chains to build localized manufacturers and what have you. But it requires that, and I think it's actually the mindset that needs to change. Number one, it's a mindset of we are very risk averse. So we will not take the risk on and what have you. And then we also don't want to collaborate, I think. But my question to Sizwe is that, how do you guys as Pineapple actually manage this dynamic tension between, technology is moving at a rapid rate, but then at the same time, you need to get to a steady state with your innovation without running away with the next big hype and saying, no, we need to do that thing instead of stabilizing what you guys have.
You are right. Technology moves at an extremely rapid pace. There's always new things coming out, and you kind of want to hop onto those as quickly as you can. But you want to make sure that your investment is not wasted, because this might just be a hype bubble that just might pop later on, and then you found out you kind of wasted your time when you should have perhaps focused on something else. And I guess that level of discernment, it's always a gamble. You're just never really too sure, but you just really have to do your best at just assessing risk, etc., etc. Remember that obviously, I guess that's the advantage of us. We do work in insurance, and insurance inherently is just assessing risk. So, it's just assessing, is this the best route to go? Do the full analysis, assess the technology, and see exactly how can we profit off it? Is it something that's applicable to our industry? Because definitely there are certain technologies which are more applicable to other industries than some. But yeah, it is quite the dance. It definitely is the dance. And I have even practical examples, of kind of these dances. We had the questions like that about AI. We had the questions about that around crypto. What if we allow policyholders to pay via crypto? But where is crypto going? Is it has the train left, or can we still get there? It's always a kind of a dance that you kind of play. So I hope I answered your question as best, but to be honest, I actually don't have an answer. It's just yeah, it's a dance,
My name is Esther. I represent an organization called Masisizane Fund. I think it's first an observation, so just insight into the funders side. I think when we have capital, we're managing people's capital, and people always want returns, right? So as funders, we're almost being asked, what is the financial and non-financial impact of what you're doing? That's always the ask from investors and people that have entrusted us with their funds. It's always, what is the financial impact? So can this business repay us? And then the non-financial aspect is, what other things can we look at, which is usually the usual suspects, job creation, number of SMEs impacted, the mentoring that you've given to certain businesses. So it's always, I think I just wanted to mention that because we always are asked to account for the money. So clearly, I think mentioned there's an accountability almost there from a funding perspective that we need to account to the people that have given us money. But my question is, how can we get more, because you mentioned innovation, you're trying to solve a solution that can bring income. How can we get the people almost bridge the divide between what us here in corporate are looking at versus the people in high school, people in varsities? How can we get them asking the right questions from an IP perspective? You mentioned IP, so that whatever solutions they're coming up with are actually trying to solve a solution, one, but also make the money. So how do we get that mindset? And I'm not sure, maybe you can shed some light, because I've always grappled with this. We're not getting people asking the right question, and as a result, solving the right problems. And as a result, we're not getting the solutions or the innovation that we should be seeing, that funders are also looking for.
I think if we had to be honest with ourselves, a lot of us are doing the same thing. We actually overlap in what we're doing, especially in the funding space or in the development space. There's very little uniqueness in what we're doing. So, and why? Because we have to focus on where, we're planting our seeds. That's where we put our effort, and we don't have a lot of time, effort, money, resources to go around. And let's be frank about that. That is why it is important that when we look at collaboration, and even when we start engaging and saying, how do we start, even in our own spaces, challenge? And I think you used, somebody said the word disrupt. Is that, yeah, I think so. Where I'm trying to think, but how do we disrupt ourselves? Because we understand the challenge, and I'm not talking about from how we're there to create jobs. Also thinking that you can create jobs is almost a bit of a savior complex, right? What can we meaningfully do to unlock the potential? What can we meaningfully do? Like, can you do one specific thing? Can you go to, even if you say, I adopt a school and provide financial literacy, or work with ecosystem players in the development space and say, we're going to help you just to refine your solutions. Because we know, for instance, a township development player is not necessarily going to have the same level of skills and understand the requirements. So how do we bridge that gap? And that's where collaboration comes in, and understanding that we cannot solve everything, but we can participate in other people's solutions. We don't have to do everything ourselves. We can really just support somebody else who's doing it, and that's okay. And then again, coming back to how do we think about our value chains, right? How do we think about real, tangible problem solving? One of my pet peeves is like when we have, especially women's events in August, but it's a talk shop, right? But you don't really see, you come to the same event, we're talking about the same thing that we did last year, but we did the year before, but we're not actually doing anything. So the question that we have to ask ourselves, so what? What are we going to do about it? We know the challenges. There's nobody here that actually, this information is not new information to anyone here. This is a very capable, knowledgeable room, right? So how are we going to, we know what the gaps are, but how are we going to collaborate better to fix the issue so that we all benefit? Because technically we all benefit. If the ecosystem matures, if companies, pipeline improves, if companies improve, right? We get better pipeline, we get better funding, we mature, we all make money, we're all happy. But let's start thinking about doing it collaboratively, because then we actually really solving problems.
Very, very sobering comments there. Nolu, one last comment? Or oh, we're good. Okay, no. Okay, all right. I will be closing the Q&A session because we do have a cocktail networking shindig. The cocktails are really what I'm here for. It's been a very, very long week, but there definitely will be an opportunity for you to engage with my panelists in that networking session. I do think we can maybe slide in one more.
Thank you. Hi, my name is Zinathi Gquma. I think my question follows up to the first question that the lady asked. That was a very brilliant question. How open are you in funding industries where profits may not be realized immediately due to the newness or lack of early adoption of the product? I'm talking EVs specifically, the charging infrastructure, for instance. Is there a solution, or are you? What is your? How do we work around that? I guess that's just what my question is, where you could fund, say, charging infrastructure now, but you only realize profits in 5 years, for instance, meaning you're not going to be able to pay back immediately. What are the solutions around that, or prospect solutions thereof, given what I've learned so far? Thank you.
See, I did take the mic for a reason.
Good.
So I'll tackle that one for you. We always look as funders for what we call a clear path to profitability. which is an understanding of at what stage, when we know we're dealing with an early stage business, an understanding of at what stage will your business reach profitability, what period of patient capital is it looking for, and then it depends on the mandate of the specific funder that you're looking at in terms of how long a moratorium period, or a period where there's either more flexible repayments, repayments that are actually linked to your revenue cycle, or even just complete payment breaks until the business reaches a stage where it can repay. It's not, depending on the different mandates, maybe it might not be a 5-year period, but it could be a period as long as 2 years, understanding that in the 3rd year the business reaches break even, but then the risk is mitigated in other ways. So when you are an early stage business and you're seeking funding and you need the funder to understand that you need a bit of patient capital initially, you need to already be at a stage where you've got your minimum viable product. You've got your concept. It's ready for market. You've got your potential customers as well. And perhaps now, because you'd be surprised that clients and customers are actually willing to give you letters of intent, and they're willing to talk about the volumes that they would require, or the levels of service that they would require from you. And that can always be then integrated into the structure of your funding, that maybe it will set out milestones. And when you reach a certain milestone, you'll be able to activate that initial offer from certain clients. So the groundwork that you would need to do before you approach a funder for that type of more risky early stage funding is just making sure that the business has a clear path. It's got a clear customer base and a clear growth plan. It can be quantified. The timelines can actually be mapped out. Then it's a clearer conversation to have, and it just starts becoming about mandates and what can be done.
All right. Well, we are bringing the panel discussion to a close. Thank you so much to my wonderful panelists for your insights. Yes, give them a round of applause. Thank you so much. Sizwe Ndlovu, Chief Technology Officer at Pineapple, Nolu Vonela, Partner at Edge Growth Ventures, and Cleola Kunene, the JSE Head of SME Development. Thank you so much for all of your insights.